What's up everyone, welcome back to my YouTube channel. I hope you are doing great. Today I hosted a free session for the community and everyone in the Forexia community, and we went through some of the most important part of trap trading and how it gets easier for you to predict what is coming next. Please make sure to like and subscribe to the channel so you don't miss anything. And if you're ready for 30 minutes of good information where you cannot find it anywhere in YouTube, stay tuned. Let's start with GBP JPY. The screen that you're seeing right now is something that we spoke about it. This box that I draw here was drawn once price was here. Going back to the previous data of the market, you're able to see what is possible for the future moves of the market by studying the previous data. We had the yearly moving average here. For those of you who don't know, this is the DMA hack indicator that I created, and this yearly moving average is one of them that only shows up in the higher time frame of 4 hour and higher. Now you can see every time price approach this yearly moving average, it has started to consolidate. It's usually a macro consolidation or it's a quick turn. So price hit it, U-turn, go all the way back where it was, or it just stops there for a couple weeks accumulating order, and then you have to read the candles and identify the next set of move that is going to happen. For here, we wanted to see either, a consolidation or a quick turn. And as you can see, it turned out to be a quick turn here. So you have two possible scenarios on a screen right now where price either consolidate and accumulate, or it just hit the level and run away almost right away. It's amazing to me personally. We have literally a what don't money do. This thing still after 4 years happening every day, and unlike a lot of other strategies, when you actually follow the real patterns in the market, then you're able to kind of see how financial market plays out. To be honest with you, it was Brexit, it was Trump doing all that thing, then it was Corona, then it was Biden, now it's a war. All these things are changing, but one thing that is not changing at all, it's the pattern, it's the structure of a trap. For the most craziest event to the most predictable events, you are able to see these patterns. And I'm not saying fundamentals are all bullshit, but I'm saying the effect they have in the market is not something that people can believe. Everything is really in order to trap you, and here is the proof for you. Based on what the money do, if you haven't read my book, mastergpg.com/WDMD, go there, sign up, and you get the link of the book in your email. So in order for a what the money do pattern to be valid, you need a couple of things to happen. First of all, you need a trend line that is validated, and then you got a support zone. You want to see a break-in retest, and this is where you have your trend line, your zone, a support that becoming a resistance, or a resistance that is becoming a support. Pretty much enough. But if you want to really go further and you want to study these, then you can actually draw your Fibonacci and all that kind of things that people do, and you realize that even in my damn drawing it's working. Like, you don't really have to understand this pattern on the charts. It's more of the concept. Once you realize it, then it's gonna be super easy to find this setup. As easy as this. This is what the money do. Resistance created, break, retest again, acts like a support, show a little bit of momentum to bring people in a market, and then all of a sudden turn away. Okay, market created this zone a long time ago, and once it approached the yearly moving average, this is very important. Although this is usually what I tell to my students, but this is very important, I'm gonna tell you guys. So any moment price approaches the yearly moving average, before it hit the yearly moving average, you can expect a trap to happen. Okay, because market wants to go and reach that level always. In order for the price to move from point A to B, they need liquidity. In order to generate that liquidity, they have to trap people a little higher or lower of the yearly moving average, depend on the position of the candles and everything. But in this case, candles are higher, price having a bearish momentum towards the yearly moving average, and that means you can expect a trap happening here. That's why when price actually stopped here in Tuesday, and on Wednesday it started to push up to the DMA again and failed to break it. This was when I decided that price is actually going to push down to the yearly moving average and it's gonna break this support. Exactly what happened here, I wasn't actually into the sell here because the moments like this is a little tricky, so sometimes pricing continue and it was close to yearly moving average, so I did not take this trade. But after the sell happened, price closed below the zone and the yearly moving average. The week after that, on Tuesday reversal Asian session, I had my first buy in this pair. It does look like sellers are enough trap. If you have your low drawn like this, you can see that yesterday's at the end of New York session, the drop below, staying in the consolidation and staying in that below that zone for the whole Asian session will bring lots of sellers, especially with the momentum for the last 2 weeks. And we do have multiple bullish engulfing DCR in 15 minutes. So it is actually possible, in my opinion, that they can start pushing it up from here. And being right at GPG levels is actually making it even more confirmation. If I want to get in right now, I would enter with 20 pips stop loss, and my take profit level would be at 153, which is about 150 pips. I'm actually gonna try it. That's not bad. I'm in. I actually closed my trade around the DMA once it reached here. I had it up to here, I think, and I closed it. So the first part of the trap, close to the yearly moving average, where it's very possible for price that want to turn. And then after they started to trap people down here, it was the first signs that price is going to move up. And we took the trade. But until here, we still didn't have a confirmation that it's over. The reversal is happening. We had enough confirmation to say there is a trap of sellers and it's more chance for the price to go up. However, everything wasn't really confirmed until Friday, 13th of March 2022, where market opened and the first 4 hour candle, and notice I'm talking to you in 4 hour candle. We only go lower time frame for the sake of better entry, tighter stop loss and everything. But when it comes to understanding the market, I strongly advise you guys to stick to the higher time frame. I made that mistake, and even if you go really back to my YouTube channel, you will see that I used to be in lower time frame a lot more than now, but I now know that if you want to really learn the real structure of the market, and if you want to identify the greatest points for turning the market, you gotta stick to 1 hour and higher. That way, you're gonna have a better chance to win. All right. So Monday starts. As you guys know, Monday is not the day that I look for trade. I do look for trades nowadays actually, but I usually at least by the start of until the start of London session, I'm not interested in looking at any charts. So in London, price kind of pushed above it, and for all I care, price broke DMA. Price hit the yearly moving average, consolidated between them, and start of a Monday broke the DMA and stayed above it. And that's why in New York session in Monday, where we had the talk with my students on the session, we draw these arrows that we said we want price to come back to 4 hour DMA, and then we wanted them to push it up. To be honest with you, I was expecting them to break this zone one more time and do a W formation there. However, two reasons where a price is not going to reach the area that you want. Number one is trap liquidity, which means there is so much liquidity trapped in the area that you are thinking that if price move down there or move up there, a lot of these people that market spend lots of time trapping them are able to get out of their positions. That's the first reason price will not go to the area you want, because there's so much trap liquidity that they just don't want to let them go. Second reason is the actual liquidity. So let's say there is a big huge order at a specific price that you are actually looking for it to, and if market maker push to that area a lot of orders will be active. Well, might be one order or a lot of order, but a lot of liquidity will be added to market that is not good for dealer. So let's say right here, I'm just gonna give this as an example. Okay, let's say you have this high up here and you're thinking that price should come here and stop on this area and go. So the two reason price didn't go here, two possible reasons. The wick didn't reach the zone. Number one, so many trap here that if they would jump here, a lot of them would get out of their buys, and then market maker will lose them, basically will lose their liquidity. And then second reason is, let's say me, you, or another big financial institution have 1,000 lot, 2,000 lots, sometimes a lot more than that, pending order right here for a sell, not to buy. So trap liquidity is people who are in a buy and now in a drawdown, right? Market don't want to get rid of them. And there is people who think this is actually sell, and they're waiting for the price to be activating their order. And that would be another reason market don't want to let trap liquidity to go away, and don't want people who are right in the direction join the market. It's always the first priority of the market. Trap people and get rid of those who are right. When I lose a trade, most of the time I'm in the second group, where market either want to get rid of me by stopping me out before making the move, or they wanna actually move before activating my order. We're gonna get to my pending orders as well. But you always have to be aware of different situations in the market. So because they don't want me in the market, when I say me, I mean person who's right in the direction. Where they don't want me in the direction, they either try to stop me out first, or they try to not activate any of my order. Okay, I hope you guys understand this because it's pretty deep and heavy. So make sure to watch this multiple times and try to write up as much as notes that you can, because this is crucial to understand for any trader. You will start blaming the right reasons instead of your broker or market or news or VAR or whatever. You start to actually know why your order didn't get activated or why you got stopped out. I wanted to see price forming a W formation here, but it did not happen. One of these two reasons is there. Either trap liquidity, or like the actual liquidity market didn't want to. They continued to play out a little bit and then started to push it up. Overall, we had about 200 on the first week and then 370 on the second week, which make it close to 600 pips in 2 weeks with this analysis, which was called multiple times in our session. Coming to this week, now this is the easiest part of it, and the reason I'm showing you this is to help you understand there is different market condition. Each pair is in a condition when you look at it. It's either on the trap and consolidation, it's in the shift process, or it's just making the move. So in my opinion, there's only 3 phases in the market: either trapping you, either shifting from a trap, or it's just making the move. The first week that we talked about is where they trap it. Right here, this 3-4 weeks is where they trap, and then this week is where they shift. So the green phase here is where market trap people. The blue phase here is where shift is happening, and the red phase here is where market just making the move and completing the move they had. All right, you should choose which time in the market you want to be there. When I do my analysis, when I say leave it alone, that means it's not into the red box. Nowadays, I actually do trade a lot of these shifts too, due to my GPG levels and the crazy level of accuracy that I'm going to show you a little bit. And I avoid taking trade in the green box. Okay, so make sure you have it in your plan and you know what side of the market you are working with. Okay, now going back here, the first week I took a trade. The second week I actually missed the trade simply because price didn't form the W formation as I wanted it. So market kind of did what they do. They didn't activate my order or didn't confirm my order, so I would miss the second wave of this or the second push of this pair. And the third week, super easy. This week was the easiest one in the book, I swear to God, because I didn't really have to think about anything. Starting from here, momentum has been changed, DMA is crossed up, price is above yearly moving average. I really don't have to do anything and don't have to do any thinking. Buy. That's it. I'm only looking for buys, and I only look for them when I see a daily structure. So closest daily structure I could find was this. That would be the closest daily structure I could find, which by the time was only this week. And I knew due to the resistance that was here, looking at it in Monday, you can see the zone they worked around here. And with the resistance that was shown here, I literally could see that price hit there, stop hunt them in Monday, basically induce people and stop hunt the buyers, shift above it, consolidation there, and notice that even this break was still respecting the other technical terms that retail trader use. Now, this is the time we go in lower time frame. These levels are Fibonacci, guys. So this is the day where the first trade was taken. This was the consolidation in Monday, stop hunt to the level, came above it, consolidation there, literally nothing to think about it. So that was an easy buy here. I actually got out here because there was my TP. I entered, went to sleep, woke up, TP was hit. It was pretty nice. And then I left it alone for a day because I couldn't really join this anymore. Missed this one too, but I'm gonna show you how you can get this back to back because I literally did it 2 days after it. So I got into this Tuesday, I could sell this in Wednesday, and then I bought it again in Thursday, sold it in Friday. Okay, so the reason I did it, first of all, in 4 hours we had literally nothing to think about other than buys. And then coming to 1 hour, you can see DMA is crossed up. Looking at 30 minutes, you can see everything that you want. A nice consolidation right at the level. You can see the level here. Very respectful other than this little time, which in the higher time frame, it was actually respectful. And then notice that consolidation. So my entry was actually here, right after this bullish engulfing. And then I was into the kind of trade was playing out around here. I went to sleep and woke up around here, partial close, and then left the running. And the running, actually I got it closed here at 140 pips. My first target was here, but my last target was basically here at 140 pips. So what I did was to set a pending order right here with 20 pips stop loss, because this is the area that I know price will react, especially with the high that was playing out here yesterday. There was a big chance for them to reverse from here back to 4 hour DMA. So because of that, I had my pending over there with 100 pips and I got to stop that. But I really knew that this is happening here and they're not gonna push in. And in this time, I was hedging. My buy position was on. I took partial profit on it twice already, and there was a runner with the stops at break even while I had the pending sell activated. And then once I got stopped out on my sell, well, my buy was in a more pips in profit. So I decided to put another pending order right at my level again with 20 pips stop loss right here, which the reason I put it here right now for you is to see I actually got activated right before session changeover, not after. Trade got activated, a little bit of drawdown here. If we go to lower time frame, you can see that price kind of broke this area, tried to stop out, but the entry was too good to get stopped. And finally, I actually was asleep down here, so I had to close my trade here with 93 pips, about 100 pips. Yeah, around here I closed it 6:37 when I woke up and decided to call it a day for GJ. So as you can see, there is literally no reason for you to confuse yourself trying to go over a lot of different things. This is structure that I've been talking about it for years in my channel, telling you pump and dump is real, telling you daily structure happens all the time, and what the money do is a pattern you want to look for it. Here is a proof that I broke it down exactly everything for you to show you that it is happening. You got the pump, you got the dump, you got multiple daily structure that is on your face, you got what the money do, DMA is working. So every single thing that we talk about still playing out to the T, and you can monetize it if you actually spend the time to master this. Just like GPJ5, just look how close and similar the patterns are. I'm not saying they have like a correlation, although they do have a correlation, but these patterns really have nothing to do with correlation. Okay, these patterns will happen regardless of the pair and regardless of the event. So in this one also, we had a yearly moving average hit, shift, and continuation. As long as 4-hour is bullish, I stay bullish as well. As you can see, multiple times that we tried and buy this thing. This one was the craziest one that I didn't hold. And from 1 to 6, I could change it to 1 to 18 raise to reward, but I got only 1 to 6 and missed this move. So the reason I got this trade was the fact that price we had the zone already here. Stop hunt previous week. Well, last week, stop hunt down. Failing to really break DMA made me wait for it, and once they broke the DMA and had a shift for a day, I was waiting for a stop hunt down. Now this is when GPG levels came to help. This was the GPG level and the DMA, and usually this is where I used to call a perfect safety trade a 1,000 lot entry, but this is a 1,000 lot entry where DMA and GPG level are really close and it be hit. It usually just flies like this. So what I did once I saw this, I wasn't interested in the trade at all until I saw this bearish engulfing. Once I saw that bearish engulfing, I had my pending order right here. I had my stop loss 20 pips, and I have my take profit actually at 2060, which is 1 to 60 risk to reward. I'm not sure if I'm gonna hold it, to be honest, guys, but let's see what's gonna happen. This was where price activated my order, shifted away from me, took partial profit here, left the runner on break even, still running. Something that is really interesting to me is 5 minutes. Just notice how long price spent at my entry. It's literally jump there, activate the order, and engulfing shift completely against it and then run away. When you are into these type of trades where price activates your order or you get an entry and price completely shifts your favor, trust me, you are sitting in a more macro trade rather than just a day trading. So try to let that winner run. That's it, guys, for today. Thank you for staying in the session and listening to all this. Hopefully you learned something.
Bro, that was a great session. I just wanted to say that gold trade was phenomenal. It's
Thank you,
very
bro.
impressive, and yeah, and you make it look easy, but it ain't. It's not easy. It's just when you put
Yeah.
it all together and the system works, boy, does it work. So put in all that work, and you can do the same thing. And shout out to Ian, Nadia, Pablo, all the people I've been seeing showing up at these sessions. You guys got it. You're gonna win. This is how you spend your Saturday morning. Much
Thank you
love.
so
Thanks,
much,
bro.
bro. Thank you so much, bro. And thank you all, everyone, for joining. Hopefully, we're gonna see you guys soon.